Ain't no place, nowhere like the Bronx. You got it? We told you it was going to go up. It's gone up. The most important thing is the world has had enough of the United States hegemony. The death of the dollar has begun. The BRICS are going to unite to do away with the dollar. And there's going to be a gold standard. And when you get the gold standard, you're going to see gold prices rise. Let's go back. The dollar is having its worst year since 1973. Not us, but BRICS to the gold currency. And that's going to drive the price of gold up to new highs that we haven't seen. And as shit's going down, gold's going up. It was up some 26 bucks today, selling nearly at 3,300, almost $95 an ounce. We told you it was going to go up. It's gone up. Oh.
In today's news recap, Citi raises gold forecast to $3,500 per ounce over the next 3 months on negative U.S. outlook. Citi raised its gold price forecast over next 3 months to $3,500 per ounce on Monday from $3,300, and the expected trading range to $3,300 to $3,600 from $3,100 to $3,500 on the belief that near-term U.S. growth and inflation outlook has deteriorated. U.S. growth and tariff-related inflation concerns are set to remain elevated during the second half of 2025, which alongside a weaker dollar are set to drive gold moderately higher to new all-time highs, the bank said. Last week, U.S. President Donald Trump imposed steep tariffs on exports from dozens of trading partners, including Canada, Brazil, India, and Taiwan. The tariffs imposed last week on scores of countries are likely to stay in place rather than be cut as part of continuing negotiations. Trade Representative Jamieson Greer said on CBS show Face the Nation, aired on Sunday. Last week, the dollar weakened after nonfarm payrolls increasing by 73,000 jobs last month, after rising by a downwardly revised 14,000 in June, which revived hopes of a Fed rate cut in September, with markets now pricing in an 81% chance. Per CME FedWatch tool Citi also highlights weaker U.S. labor data in second quarter of 2025. Institutional credibility concerns have increased regarding the Federal Reserve and U.S. statistics and elevated geopolitical risks related to the Russia-Ukraine conflict. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Bitcoin. Bitcoin jumps as Trump is set to sign an order that allows cryptocurrencies for 401ks. Yep, it's at 117K per coin. We told you this. We wrote it week after week after week since Trump got elected, that Bitcoin was going to bounce and Trump's going to do everything he could do to get it because he, his family, his friends, his political team are in the game. Kadish? You don't have to be a brilliant guy to figure this out. Trump's all about the money, the bottom line. Oh, and the $100 million he got from the crypto club, plus the tens of millions of dollars that he got from the crypto guys and girls for his inauguration. So it's going to keep going up. And as shit's going down, gold's going up. It was up some 26 bucks today, selling nearly at 3,300, almost $95 an ounce. 3,400, $394.90. Yeah. We told you it was going to go up. It's gone up. Oh, I don't tell the truth. Hey, fuckface, I forgot. Oh, yeah. Ready? Again, all about the club. Wall Street Journal. Big firms start to see tax law windfall. Trump's redneck recession hits the working class base the hardest. Despite stock market highs, the U.S. president risks losing base that voted for you. You don't give a shit about that. The facts are all there. The rich are getting richer, and all we are plantation workers of Slavelandia. End of story. Trade war causes economic ripple, no quake. It's true. So far, the facts, the inflation hasn't gone up the way it is. And I know, again, I can't stand Trump's genocide support. But again, people hate me for supporting tariffs. I want jobs back to America. When we had manufacturing jobs, and again, you only look at the data, the jobs that are being created, they're in healthcare, social services, hospitality sectors. They pay shit. So I'm in favor of bringing jobs back. Before Clinton brought China into the World Trade Organization, 10% of Chinese 18-year-olds went to college. Now, almost 70%. They're going to lead the world in AI. There's going to be a dot-com bust. Dot-com bust 2.0. Chinese exports growth in July sharply beats markets, CNBC. Climbed 7.2%. That's right. Less coming into the United States, more going into Europe, more going into Asian nations, and more going into South America. Trump punishes India for buying Russian oil by doubling 25% tariff. Yep, doubling it. India is going to keep buying oil. I did an interview on Russia today with Sanchez and talked about this a lot. Only 2% of India's GDP comes from exporting products to the United States. They don't need the United States. It's 1.4 billion people. They're becoming more and more self-sufficient and self-sustaining, just like China is. 1.4 billion people versus 347 million in America. You don't have to be smart to figure this out.
Massive news today as the Federal Reserve has issued a note relating to the reevaluation of gold. Official reserve revaluations, the international experience with public debt at high levels. Some governments have begun to explore financing additional expenditures without raising taxes, while also not increasing public debt outstanding. One possibility is using proceeds from valuation gains on gold reserves, as has been floated in the U.S. and Belgium recently. For the U.S., this would involve revaluing the government's 261.5 million troy ounces in gold reserves, the largest gold reserves globally, from a statutory price of $42.22 per troy ounce to current market prices, which stand around $3,300 per troy ounce. This note reviews the rare cases when countries used proceeds from valuation gains on gold and foreign exchange reserves. Over the past 30 years, only 5 countries have done so: Germany, Italy, Lebanon, Curacao, and St. Martin and South Africa. Central banks have used revaluation proceeds to offset operating losses and maintain net profits or minimize reported net losses. In Italy, revaluation proceeds covered a one-off loss for the conversion of a specific bond the Banca d'Italia owned. The second broad category of revaluation transfer is when gold reserves are reported at fair value and funds listed in revaluation accounts are transferred to the central government. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps. And check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trading the gold-silver ratio and increase your ounces. With this easy-to-read book, you'll know everything you need to know to stack efficiently so you don't have to rely on market commentators. Enjoy the episode.
The most recent inflation reading showed consumer prices rose 2.7% from June from a year earlier. That was faster than May increases of 2.4%, a sign that tariffs boosting prices of some goods, the economy said, but the impact so far has been milder than many predicted. And again, it's going to get worse. There's going to be dragflation. You're going to see the economy's going down, inflation going up. But again, if it happens in the long term, it could happen. The U.S. government has collected $127 billion in tariff revenues so far this year, about $72 billion more than it had at this point last year. So it's helping. But then they go on to write that it's still a long ways to go. Yeah, but it's getting there. And so it's a positive. Feeble corporate investment putting global growth in danger, OECD says, or warns. This is from the Financial Times. Net investment across OECD nations has dropped from 2.5% of GDP before the 2008 crisis to 1.6% of the GDP for median country, with the pandemic delivering a further blow. Anyway, it's going down. It's going down. There's going to be a global dragflation, declining economic growth, not stagflation, and rising inflation. Brazil tariffs take effect. That's right. They, based on shipments to the U.S. last year, the tariffs would apply to some $14.5 billion, or 36% of the country's exports to the U.S. The 50% tariff, that's going to bring up prices of coffee and other goods. But the most important thing is the world has had enough of the United States hegemony. The death of the dollar has begun. The BRICS are going to unite to do away with the dollar. And there's going to be a gold standard. And when you get the gold standard, you're going to see gold prices rise. Let's go back. The dollar is having its worst year since 1973. What happened in 1973? They took us off the gold standard. Oh, in the Yom Kippur War, when the Middle East nations cut off oil supply to the West. We're having the worst dollar year that year. We're going to go back, not us, but BRICS, to the gold currency. And that's going to drive the price of gold up to new highs that we haven't seen. ECB faults China for job losses. That's the Wall Street Journal. Economists at the central bank said between 2015 and 2022, 240,000 jobs had either ceased or existed in Europe.
What do you think of Shechtman's take? Do you agree with him? Is the big reset a reality, or is it all just bollocks? Post in the comments section down below your honest opinion and share with the stackers your gold and silver price prediction. Now, check this video right here because it's a perfect fit for you, and I'll see you on the other side.